Okay, hello traders, welcome to this week's forex market analysis. Now in today's video we want to look at three major currency pairs, namely euro dollar, pound dollar, and dollar yen. Okay, so we are going to start off with euro dollar daily time frame. Euro dollar daily time frame. Now as you can see, euro dollar has been pretty much bearish, all right, and as of September this year it printed this low, and then thereafter it started rising up, all right, apparently trying to retrace, okay, to go and mitigate out of one form of POI before continuing the downtrend. We have no reason just yet wanting to buy the euro dollar, all right, and I want us to see some structure points on euro dollar that we can look at. Okay, we have a break of structure here, all right, this is a break of structure as you can see, and then yet we have another break of structure here, all right. If you don't know how we mark our break of structure, then avail yourself of the opportunity of our 5-day bootcamp, all right, that is coming up between December 1 and 5 2022. It's just for $50, all right. So if you want to approach the market professionally, you want to know how to really understand every move in the market, then you need to attend that very bootcamp. Okay, now with that being said, let's go back. So we have a break of structure here. Let me quickly denote that so that you understand. All right, we have a break of structure there. We have a break of structure here as well. Okay, this is the most current break of structure. Okay, now as you know, all right, the reason why the market moves the way it moves is simply because of liquidity. All right, and liquidity lies above every high and below every low. I want you to understand that. And therefore, when we look at it, look at this point, okay, there is liquidity lying above this point, all right. I want you to know that, okay. But in the retail mindset, all right, now the retail SMC traders will look at this as an OB, a valid OB. All right, why will it be? I'm going to explain to you, and therefore we like to take trade from there. Why? Because they see that here is a break of structure, and therefore they think or they believe that this is an OB here, whereas this OB here is a fake OB. All right, it is known as SMT, smart money trap. All right, even though price came back and tapped into that OB, the retail SMC traders OB, it tapped into it and started coming down. Now I want you to understand the mindset of the retail SMC trader. All right, the mindset is that with the tapping of this price on this OB, all right, price was going to continue going downward to break this low here in order to continue with the downtrend. All right, that's the mindset of millions and millions of retail SMC traders. All right, but take a look at what price has done, because primarily why the institutions, all right, move this price lower, all right, is to induce traders to go short. All right, they want to have more traders, they want to introduce more traders into the market in order for them to go short. All right, but just immediately after they dropped a little bit, they went up and then took all the traders out. Okay, took them out of the market. Why is it? It is because liquidity rests above this high. I want you to understand that. Okay, liquidity rests above that high, and again there is liquidity resting above this high. Now take a look at this. How many millions of retail SMC traders will look at this as a powerful OB, all right, and which actually is a kind of OB to them, all right. But let me announce to you that this is also smart money trap. All right, this is smart money trap. The banks understand the retail mindset. They understand the trading psychology of the retail traders. All right, we are all retail traders, no doubt. All right, but when you lack the knowledge, okay, of you lack the proper knowledge of the market, then you will always find yourself at the wrong side of the market. So price came and tapped into that retail SMC OB and then dropped once more, just like in this case that it dropped. Okay, when it dropped, what was the intention of the smart money? It was to introduce more sellers into the market so that they would think price now was going down, to come and break the structure lower. All right, to continue with this downtrend. But look at what they did. After going down a little bit, they came up and took all the traders out of this market here. You understand that? Why does that happen? Liquidity rests above this high. All right, again, another type of traders, other set of traders will look at this and say this is a banger, that this one will hold. All right, so they mark this as their OB. They will mark this as their OB. All right, and place their pending order there. But look at what price did. Price came, took them out of the market, and why does that happen again? Because liquidity rests above. All right, now if you do not understand the concept of liquidity properly, you will find yourself always being on the wrong side of the market. Now, after taking out all this liquidity that I pointed out, all right, price now bump into this OB here. All right, price now went to this OB here. Even though this OB here is not the best of it, but price now bump into that OB, and take a look. It bumped into that OB. When it now bumped into that OB, take a look at what price action did, what the institutions did here. They move into that OB, all right, aggressively with this candle, and all of a sudden they retraced, all right, on that candle. They retraced completely, and at the end of the day, price closed below this previous high here, this liquidity here. All right, price closed below it. I want you to understand that. And that tells you that what has happened there is that the smart money used this candle to sweep all the liquidity resting above this high. All right, before they now start moving down. The fact that this price closed below this previous high, all right, is a strong indication that price was now ready to go downward. All right, so we are expecting that. Now, this is on the daily time frame. This is the picture of the daily time frame. So essentially, what we may be looking for is an opportunity to short this market. All right, as long as this POI here holds. All right, as long as it holds. Okay, so we now need to drop down to our lower time frame, like the 15M. All right, like 15M, to see what is going on there. Okay, so we are now on 15M. Let's see what is going on here. Okay, now remember that this POI that you are seeing here is the daily point of interest. All right, now I'm not going to be explaining every detail of this movement in the market, but I just want to show you something, guys, and I want you to understand. When you move to your lower time frame, what you need to do is to begin to read market structure, especially when it's approaching your higher time frame POI. You need to start reading structure from there. Okay, now as you can see on the 15 minutes, all right, price came up from this high. All right, from this high. Okay, after forming that high, let's mark it. This is our high in the market, guys. Okay, this is our high in the market. All right, and as you can see, price has taken out that high. All right, price took out that high. Now, inside of your higher time frame point of interest, can you see that price took out that high? And after taking out that high, all right, it printed a new high. Now, this is our new high, guys. This is our new high here. Okay, that's our new high, because here now becomes a break of structure. All right, this is now a break of structure. I want you to understand that. Okay, just a minute. Okay, so that's a break of structure now. Why? Because it has produced another high. Now, I want you to understand, guys, that this is not your high. All right, this is not a valid high. Neither is this a valid high. This is not a break of structure. Neither this one is the break of structure. I want you to understand that. This is your high. All right, and where is your low? Well, the low, your low is here in the market. All right, this is your low here. Okay, that's your low. That is the most current significant low. All right, so this is your trading range. This is your high and this is your low. This is your trading range. I want you to understand that. Okay, now, but don't forget that when price, all right, tap into our point of interest, okay, when it tap into this point of interest, okay, now this is called liquidity sweep. Why is it liquidity sweep? Because immediately after they issued this candle, all right, that took out all the liquidity resting above this high, all right, they came down and broke this minor structure here. This is a minor structure, guys. All right, broke the minor structure low here to the downside, and that is known as a choke. All right, that's known as a choke. I want you to understand that. That's known as a choke. That's not, sorry guys, let me take it out. That's not it's not a break of structure, it's a choke. Okay, so I want us to know that's a change of character. Let's use the right word for it. It's change of character. It's not a break of structure. All right, so that's a change of character, and after that price printed this low and went back up to create this high before dropping. All right, can you see that? These are minor structures. These are minor structures. All right, now remember, above every high is liquidity, below every low is liquidity. Now liquidity rests above this high. I want you to understand that. Now liquidity also rests above this high. Okay, liquidity rests above this high, so you should be sure that all this liquidity will be taken out before price will be able to react off of any point of interest, or not even tapping on any point of interest before retracing. All right, and therefore, as you can see, price went up, took out all this liquidity. You need to understand the concept of liquidity like the back of your palm if you want to trade the market successfully. All right, now, so this, it printed this high and then came down. Remember, the minor structure low is here. All right, this is the minor structure low. Let me just show that to you now. This is the minor structure low. Okay, this is minor structure low, and I want to use another color to denote that so that you can understand that that is a minor structure low. Let me use a red. Okay, so that is a minor structure low, but your major low is this one. All right, so we're expecting price to come and take out this one. All right, if this downtrend is to be confirmed. All right, if this what do you call it? All right, if price is respecting this point of interest, this is our higher time frame point of interest, then we should see price come to break this low here. All right, but let's look at some opportunities we had during last week. Okay, using the minor structures. Okay, let me delete all this because I don't want the chart cluttered. So we had some opportunities, maybe one or two opportunities last week on this pair that we could have taken advantage of. Now here, because structure, you couldn't have entered here because there was no proper structure for you to have taken trade from this market. All right, but it reacted off of our order flow. All right, you know, this is our order flow. The whole of this place from here to here is our order flow. So price came and reacted off of that order flow. All right, when it reacted off of that order flow, so what are we looking for? We are looking to sell this market. All right, and price now came down and formed this low, went up again and came back down. Now you should understand your liquidity, like I've been saying, this is liquidity. All right, now let's see where there is liquidity here. Okay, price went up, came down, okay, before going up again and coming down. All right, so this, my friend, okay, is liquidity here. Let me see. We are having this liquidity here. All right, and we expect, no, this is not, that's not your liquidity. Here is your liquidity here, guys. All right, here is your liquidity. Imagine how many traders, all right, will be placing their their sell order there. Okay, this is your liquidity. Take a look. Price broke structure here according to retail traders. All right, price has broken structure there, and therefore this is your OB here, guys, isn't it? That is what the books tell you. Whereas this is not an OB. This is smart money trap, guys. All right, this is smart money trap to induce traders to go short from there. It's smart money trap. All right, because liquidity rests above every high. Now this high has huge liquidity, and therefore the smart money had to push price up, all right, to capture the liquidity there. Let me say something here. If you do not find liquidity before the OB, the candle you want to mark as an OB, then you will become the liquidity in the market. Your OB will become the liquidity in the market. I want you to understand that very, very well. These things are simple enough to understand, but if you want to learn more, then you need to take advantage of our mentorship to really learn more. Okay, and therefore price now took out that liquidity there and bumped into this OB. Take a look, guys. It bumped into this OB. This was a perfect trade setup that you could have taken, all right, last week if you understood structure and liquidity. As you can see, price went and took out that, reacted off of that OB and then dropped. All right, I want you to understand that. Now, when it reacted off of that OB, now this is your minor structure low here. This is your minor structure low. All right, this is your minor structure low here. Okay, let me change this thing again to black. That's your minor structure low there, guys. All right, that's your minor structure low. Okay, no, I'm still using it. Let me use it as red, because I'm still talking about the minor structures there. So that's your minor structure low. All right, so price now broke it and came down. All right, when it came down, all right, where is your inducement? Your liquidity, guys. Where is your liquidity? Your liquidity rests above every high. This is your liquidity, and price must have to take it out. And as you can see, price took it out. All right, a lot of traders will be placing their sell order around this point, and then look at what price did. Price reacted up momentarily and went up to take them out of the market. All right, so that, because liquidity has to be cleared in the market, a lot of traders will also be introduced to sell here because they think that this is a perfect OB. All right, they think this is a perfect OB. Why? They think it is a perfect OB because there is this imbalance here. All right, but they do not know that this is smart money trap as well. And so price came, took them out of the market and pushed higher. All right, push higher before dropping. Okay, I want you to take note of this. Okay, and reacted off of this OB here after taking out all the liquidity. All right, price now reacted off of this OB. All right, we are moving from mitigation to mitigation. All right, so price reacted off of that OB there before dropping. So where are we now? Well, remember, this is your minor structure low here. All right, this is your minor structure low here. So what are we expecting price to do this week? Well, what I'm expecting price to do this week, all right, is for price to come down. All right, come down, clear this minor structure low, and perhaps go to clear this sorry guys, just a minute. So I'm expecting price to come down, all right, clear the minor structure low here and clear the main structure low here, all right, and then if that happens in the week we want to enter, then come back to take out this liquidity here and then bump into any of these OBs here before we see any movement down. And where is the point of interest we can be looking out for? Well, there are two I want to point out here that I'm looking for price to come and react up from. Okay, this is one point of interest that we can look. That's our supply zone that I'm looking for price to come and react off before going down. All right, or this here, guys, this here. These are the 2 points of interest, all right, this week that I'm looking for price to come and tap into before going down. All right, remember, it has to break this minor structure point of interest, and sometimes it could come down to even break this one before going up to mitigate out of these OBs. So you need to understand that. That is, given the fact that this POI, this higher time frame POI, is going to hold. All right, so that is about euro dollar 15M. All right, so now let's quickly go to GBP USD and see what we have there. Okay, GBP USD. All right, daily time frame. Let's see that daily time frame. Let's see what that holds for us. Well, GBP USD is exactly the replica of Euro USD. Okay, and as you can see, pound dollar has been pretty much on a downward movement over time. All right, and then printed this and started retracing. All right, this is simply a retracement. It's not a reversal, it's a retracement. And remember, your liquidity lies here. Don't forget that your liquidity is there, and then your liquidity is also here. You need to understand that very well. All right, do you know how many traders will be introduced here for sale? Take a look. Many traders will be introduced here for sale, guys. All right, they will enter their short positions there, all right, to go lower, and price actually came a bit lower. All right, in order to induce more traders to go short from here. All right, the mindset of the retail trader is that since this OP has held, price will now have to come down to take out this low to continue with this downtrend. Whereas the original intention of the institutions, all right, is to move price higher. All right, and as you can see, price moved down a bit and then went up to take all the traders out of this place. All right, and the same thing happened here. Why? Liquidity rests above these highs. I want you to understand that. Okay, just like euro dollar. Okay, price reacted off of this OB here. It reacted off of this OB here. Okay, let's see the OB that is reacting off of. Okay, price reacted off of this OB here. Okay, and tap on that OB. All right, it tap on the OB. Now this is your daily time frame. This is the picture of the daily time frame on pound dollar. Now if we quickly get to the 15M to see what price will do, let's see what price is going to do on the 15M, or where price is on the 15M. Okay, let's see that. You need to read your structure as market is approaching your higher time frame point of interest. This is clear enough. I'm not going to be going back to tell you every inch of movement of price, but here there is a break of structure here. All right, let me now you have a break of structure there. All right, this is a break of structure, guys. I want you to understand that. Okay, our break of structure is not coming up. Okay, so that's our break of structure, guys. All right, let me zoom in for you to see properly. Okay, that's our break of structure before this high. Okay, this is not a valid high, so don't even mark it at all. This is not a valid high. This is our high now. After this break of structure, this is our high. All right. So if this is our high, okay, if this is our high, so this is our high in the market. Okay. Now this is our break of structure. All right. So where is our low? Our low is here, guys. Our low is here. Okay. So our trading range is between here and here. All right. And as you can see, price came down. All right. Price came down seriously into maybe one form of POI here or order flow. All right. To mitigate out of this order flow, I should think. All right. I don't know, but I think that is what happened there. But let's change this color first. All right. I think that's what happened there. I don't know, but I have a strong belief that that's what happened there. But let's see. Okay, so you can see price tap into this order flow here. All right, after taking out this liquidity, it came straight into that order flow and moved higher. Now, this is our last significant higher low. All right, so we want this higher low to be violated. But in terms of your minor structure, when I mean minor structure, I'm referring to the lower time frame structures. All right, don't be confused. This is your minor structure here. This is your minor structure. All right. Please, you need to understand how to read structure correctly in the market. So that is your chalk. All right. Why is it your chalk? All right. Because price tapped into a higher time frame supply zone, and then price came down to take out the immediate low, the most current low before this high. All right. So that's indicates a change of character. All right. And after that, price went up and then dropped. Okay. This again is your liquidity here. Don't forget all the highs that you see in the market. All right. If you want to clearly identify these highs, all right, that will serve as liquidity, please try and join our 5-day bootcamp. All right. Because it's going to change. It's going to be a game changer for you. All right. Try and join it. It's only for $50. All right. Or you join our mentorship by January. Our full mentorship by January will open admission for those who want to come and learn the same strategy we are using to make consistent profit in the market. All right. Now, so that is that. Okay. It took out that structure, all these highs. It took them out. The liquidity. It took them out. Okay. And then bump into this OB here before going down. This was guys, you would have made some good money sometimes last week if you knew how to read your structure correctly in the market. As you can see, price can tap into that OB. All right. If you don't know how we choose our OB, then I still insist. I appeal to you to join our 5-day bootcamp. You will learn a lot. All right. And so after tapping on this OB, it dropped. All right. It dropped, but failed to come and take out this minor structure low here. Remember, this structure here is a minor structure low. This is still our minor structure low here is still intact. All right. Let me use red again for that. It's still intact. That's a minor structure low here. It's still intact. All right. And before you know it, price now went up. All right. Now, and this now served, this point served as what? As liquidity. And therefore, when price went back up, it took out that liquidity. All right. Before dropping. Can you see that? To take out this minor structure low. So here we are now. All right. So what are we expecting from pound dollar in the weeks in this as market opens this week? What are we expecting? Well, we are expecting price, all right, to now come and take out this major structure low here. All right. But in doing that, we want to take advantage of these 15 minutes minor structures. All right. To see if we can enter the market. If we can enter the market. So what will I be looking for here? Well, I'll be looking for price. All right. Because all this is inducement, guys. All this is inducement. Okay. I'll be looking for price to come and take out this inducement and then react off of a POI or even not a POI, all right, before going back up to look for one OB to tap into before dropping, all right. But we will not for now, because as you can see, the price action here is a bit sketchy, all right. So we want to wait for price to open on Monday for us to be able to really get what the institutions want to do here. And that is why if you have not subscribed to our Telegram channel, please do so immediately, so that, because throughout this week we will be doing an update on these three major pairs that we are looking at now. Okay, I want you to understand that. Please note that if you have not subscribed to our Telegram channel, please do so. It is completely free. All right, so that's what we are expecting from pound dollar this week as the week opens. And now we go to our next pair, which is dollar yen, which is going to be the last pair that we'll be looking at this very week. Okay, dollar yen, we are going to daily time frame, guys. Let's see what dollar yen holds for us. Let's see what dollar yen holds for us. Aha, so now we are dollar, this is dollar yen daily time frame. As you can see, dollar yen is pretty much bearish, is the opposite of what euro dollar and pound dollar is doing. Okay, so now take a look. Price violated this structure here. It's our most current structure break. I want you to understand that it's our most current structure break here. Okay, that's our most current structure break. So after breaking that structure, what happens? Just a minute. So that's our structure break. Okay, now after the break of structure, where is our high and where is our low? Well, this is not your high, guys. Okay, it's not your high. Now this is your high. A lot of guys are making mistakes about how to map the structure of the market correctly. This is your high, guys. This is your high. I want you to understand that. So that's your high in the market. And where is your low? This is your low. This is your trading range now. All right, I want us to understand that this is your trading range. Okay, from here to here is your trading range. This is your high and this is your low. And as you can see, price came and took out this liquidity here. All right, took out this liquidity here. It took out the liquidity, all right, and came into this order flow here, or OB, whatever you want to call it. It came into this point, all right, and as you can see, it's trying to react off of that. That is the daily time frame picture. Now, what are we expecting on our 15M concerning dollar yen? So let's look at it on the 15M and see what we can be expecting from the market this week. All right, let's see. Okay, so now take a look. Price has come to tap into our point of interest. Okay, it tapped into our point of interest, and for me, I will still be looking for price to go deeper into that our point of interest. But nevertheless, let's look at what we have at hand right now. Okay, now don't forget, this is our last break of structure. Okay, this is our last where is it? Is that our last break of structure? Just a minute, guys. Okay, this is our break of structure from here. Take a look. We had a break of structure from here to this point. Okay, our break of structure is with a candle body close. All right, so that's our break of structure. Okay, it broke it to the downside. Price came from here, all right, came down, printed this low, went back up, came down to take out this low, all right, and then price went up to violate this structure here, all right, to the upside, violate this structure. Okay, where is it? I want to see. Am I just a minute, guys? Okay, so it violated that structure there to the upside. So this is your high now that produced this law. Okay, so your valid high that you should be looking out for, all right, to break structure, it's not certainly this, but you know, every high has liquidity, and therefore retail SMC traders will be looking out for this OB here as their valid OB, because they believe structure has been violated here. All right, because they believe structure has been violated here or here. All right, so they will mark this as their OB. Now this is smart money trap. I want you to understand that. Please don't fall for this anymore. Okay, this is smart money trap. So price will have to take out that smart money trap. Now this is the real structure point that you should be looking out for. All right, for price to break. Okay, once price breaks that structure point, then you can now say that price is ready to go bullish. All right, but as it stands now, price is yet to break that structure to the upside. Okay, it's yet to break the structure to the upside. Now in terms of internal structures, well, there were some opportunities to enter the market during the course of the week. Okay, and I'm not going to go through that again here. All right, simply because of time. We will not go into that, all that. But what we are expecting is for price to come and take out this high. All right, this is our major high that we look to, for price to take it out to indicate to us that price was ready to go higher. So in the course of this week, as we want to enter this week, we want to monitor this high to see whether price will take it out. In the alternative, we want price to come back down. So if there is an opportunity for us for price to come back down, to come and go deeper into this our higher time frame point of interest before going higher, then we will be looking at what price will do when the market opens on Sunday. All right, so on Monday we'll monitor and see what will be happening. Again, please, if you have not subscribed to our Telegram channel, please do so, because we are going to be updating you step by step about these three major currency pairs. All right, what they do, okay, their whole potential for good trades in the week to come. So therefore, subscribe to our Telegram channel. Okay guys, I hope you enjoyed this video. Now if you want us to be making this kind of weekly analysis, please subscribe to our channel Rallytop Academy, and also subscribe to our main channel, which is Rallytop Investing. There you have lots of materials that can help you to learn faster. All right, and if you really want to know how to approach the market professionally, then please take advantage of our 5-day bootcamp that is coming up between December 1 and 5, 2022. All right, it is only for $50, and we are going to show you the entirety of our trading strategy, and this is comprised, all right, or compressed into 3 important concepts. All right, and the concepts are: number 1, we want to show you how to map institutional structure, not the retail trader structure. All right, the institutional structure. 2, we want to teach you about inducement and liquidity, which is key for your consistency in the market. All right, and thirdly, we want to show you the kind of OB that we use that gives us edge in the market. All right, so please take advantage of that 5-day bootcamp to be part of it. Register now. We have only 3 slots left. All right, 3 slots left, so please be part of it. I will not take more than 5. We originally had 5 slots, so now we have 3 slots left. Hurry now and register for that program. All right guys, and if you are yet to subscribe to our YouTube channel, please do so, like I said. And if you like this content, please don't forget to give us a like, make a comment. You can say nice, whatever, just give us a good comment. All right, give us a thumbs up, so that YouTube algorithm will be able to share this video to a more larger audience. All right, please do that for us. Okay, we need it. All right guys, I see you in our next video. Have a wonderful week ahead.